In this video, we will discuss about liquidation price. As you can see that I have an ongoing trade. I have taken a long position on BTC. However, the price is 37,695 and I took entry at 39,052. So that means that I took a long from 39,000, but the price has fallen below to 37,000. As you can see in the market price column as well. So I'm in loss of -8 USDT or -71%. Now I am worried that if the price keeps on falling, then I might get liquidated. What is liquidation? This is the column of liquidation price. This price is telling you that if the price falls to 29,079, then all my amount of all my margin will be grabbed by the exchange. As I'm trading on Binance, so once I'll hit this liquidation price, then all my money will be taken by exchange. So if I fear that I am very near to my liquidation price, supposedly the price has fallen to around maybe 30,000 and I'm pretty near to my liquidation price, so I have to save myself by adding some more funds so that my liquidation price will be further below and I will not be liquidated. Whenever you are in loss and you feel like that you are very near your liquidation price or you are heading gradually towards your liquidation price, then what you do is you just add the margin. By clicking on this button, you will be shown this window. It says adjust margin. You can add or you can remove some margin. Maybe you can remove this much amount, or you can remove or you can add whatever is present in your account. I have 6.79 USDT in my wallet, so this much amount I can add. And if I want to remove some amount, then I have to click this remove and let me click maximum. So this is the maximum amount that I can remove. But I am dedicated towards adding margin because this is what I'm discussing in this video. So I'm not going to remove anything. Instead, I'm going to add more margin. Let me open it once more. You have to click over here on this small button. If I can zoom it in. This is the button where you have to click. And my estimated liquidation price is $29,079. So supposedly I am adding some $3. Now you can see that my estimated liquidation price has gone to 28,577 just because I have added more margin to it, and I'm making myself more safe by adding more money and keeping my liquidation price far away. What is the benefit of keeping the liquidation price far? The benefit is that the market repeated cycle. So if the price is going down, then after hitting its strongest support, there is a chance that the price will further move up. But if the price has hit your liquidation price, then all your money will be lost. This is why futures is a very risky business. Now, in order to save yourself, you have to add some margin. This way, if the price has reversed before touching this price, then you will be safeguarded and your amount will not be grabbed by the engine. Rather, you will be again in profit, maybe after 24 hours, maybe after 2 days, depending on the situation in which market is working. So if I add maximum addable amount, that is 6.79, then you can see that my liquidation price has further gone down by 27,943. So this is how you can keep on adding your amount and okay, let me add $1. And if I click confirm, so it has added to my liquidation price. You can see that 28,912 is the liquidation price, and I'm pretty much sure that I might not be falling this much below. So this is how you can manage your liquidation price and safeguard yourself by adding some more margin. So always keep some extra amount in your wallet in order to make yourself at a very safe spot. So this is all about liquidation price.